Woo! What is up, everybody? So, the Fed just announced the interest rate changes, and I'm going to announce those in a second. But some things have been going through the roof over here, and I've got a stock explorer here. We're just going to check everything out over here and keep the fun going. But I had to jump on a live stream real quick. Say hi and like. Yeah, so this has been crazy here. Thank you for liking when you come in. So the Fed just announced what they're going to do with the current interest rates, platform changing, and what they have planned going forward. And I'm going to read that statement to you in a second. But the big news is that they have left rates unchanged. What's up, Hotshot? How's it going? So, let me get my headphones on. I literally was running. I was having a run. What's up, Sublime Mad Dog? And I saw that they released the news right now. So I had to jump on here and let everybody know about the interest rate. They are leaving the interest rates unchanged. What does this mean for cryptocurrency? Well, Dogecoin started to go up as soon as that was announced. You can see right here where the announcement came out, and it started to go up. And Bitcoin, this is what happened to Bitcoin. So Bitcoin went up. So what this does, what's up, Pond Mullet? How's it going? What's up? Hot Shot, Sublime Mad Dog, and Pond Mullet. So let me explain what's going on here. And this is related to crypto as well as the regular stock market. And it's probably got bigger implications for the stock market. So here we are on the announcement. Now, what happens is people price in what they think is going to happen with the announcement. And let me just explain the interest rate thing real quick. So interest rates, it's at zero, right? So which is about as low as you can go. And that means that money is basically free for banks, and anything above that is what you are getting. And this is a real simplified version. If you get a rate for 2.5%, that's kind of what the bank's making at that point. So this is what is happening. It basically is free money. There's nothing that's going to be more free than this. When my parents were like buying houses and stuff like that, interest rates were 17, 19%. And then in the mid 2000s, interest rates were at like 5.5% to 6%. And people thought that was the craziest, lowest thing they'd ever see. And then come fast forward, and rates have been dipping down because of the crash of the housing market and Morgan Stanley has given access to their customers to Bitcoin. That's good news, Steven. Thank you for letting me know. Yes, but they let the statement is out, and I'm going to read the statement to you. So should I just get right to the statement or explain how interest rates work? Some people don't know, and I'll give a precursor here. So anyway, if they stay low, that means that usually what happens is the economy might get overheated because there's so much money and credit being flooded into the market that people do riskier things. And then when things get more expensive because people are making so much money, hypothetically, then they stop inflation, which means the price of things getting more expensive, by making interest rates higher, which means there's less money in the economy, and it slows the economy down because it makes it harder for companies to grow by borrowing money because it becomes more expensive to borrow money. And they have decided, even though there is inflation, they basically said, and by the way, and also to the person, that thank you for they haven't spoken yet. They don't need to because they released a statement, and then the statement we can all read. And so when we're going to read the statement here, and I'll just go over it right now. You guys want me to read the statement and summarize it, or do you want me to look at the different stocks that have been going batshit nutty over here? So. I mean, they're spikes, right? But they're definitely large spikes according to what people anticipated. I don't think people anticipated this. I think they kind of priced in a 0.25% raise or a 0.5% raise because inflation is to rear its head. So tell me what you want me to do, and I'll do one of the ones first. So, and here's what Doge has done. Doge actually just took a bit up, and now it's taking a little ride down right now. So, in the last couple minutes. It did go upwards. People are taking profits. There's been some large sales. So somebody right here, that was a large sell order. So ADA took a tip up and people were trimming. So there was a slight raise upwards on a lot of these. There's Roblox, Bitcoin, a little bit correction there. But right after the announcement, you can see where all these things go up because people didn't anticipate this necessarily. All right, so I'm going to read. I got a request for read, and that's good enough for me. Chili's, and then Tesla took a big hit. So, and let's look at the Dow. You know what did affect negatively was the the NASDAQ actually took a hit, and a lot of tech stocks would take a hit. So there's the Dow. All right. So let's take a look. And I'm not giving any advice right now. I am just going to read this statement. And here we go. So the Federal Reserve issues their statement, and this is from 2 p.m. So, of course, they're committed to giving their full range of tools to support the economy in a challenging time. They want maximum employment and price stability goals. So, they're recovering the economy, sectors most adversely affected by the pandemic. They're really worried about what they're saying here is people that are affected. So even though some businesses are zooming extremely well and really going off on things, and your Amazons of the world, there are a lot of people that aren't, and so they need to make sure that we get the economies and the low-income areas to follow along with the economy. And I think that's kind of what they're mentioning as far as the flow of credit goes, and for the weakest parts of the economy. Now, the path of the economy will depend significantly on the course of the virus, including progress on vaccinations. The ongoing public health crisis continues to weigh on economic activity, employment, and inflation, and poses considerable risks to the economic outlook. So they think there is still a large risk to the economy because of the coronavirus. And many people, experts, and I'll just interject, besides not what they're saying, that we haven't even seen the effects economically of this yet because it's been in a holding pattern, and with the U.S. government and many world governments that's throwing money and stimulus at these problems. So the committee seeks to achieve maximum employment and inflation at a rate of 2% over the longer run. So they basically are happy with a rate of 2% over the longer run for inflation that's within their level of comfort. Maybe 3% is not going to cut it, but 2% will. And they aim to achieve inflation moderately above 2% for some time so that inflation averages 2% over time, and longer-term inflation expectations remain well anchored at 2%. 2% works for them. 2% is good enough for them, and it seems like they're happy with what they see right now. So this also pretends, okay, let's read the rest before I start guessing into what they're saying. The committee expects to maintain an accommodative stance of monetary policy until these outcomes are achieved. That means accommodative stance means we're going to keep these interest rates really freaking low. And that's what that means. And why I sounded so excited is because this is kind of big news. I thought that this would go the other way. I thought the inflation was going to be a really big problem. But they do have here's the thing. They have plenty of room to stop inflation. They have zero room to help the economy at this point. We've already thrown trillions of dollars at it, and we can't lower interest rates anymore. So this is also the cautious approach, by the way. So, because if inflation gets out of hand, they can just add a percentage to the, it'll slow it down within a quarter pretty quickly. So, the committee decided to keep their target range of the federal funds rate at 0 to 0.25% and expects it will be appropriate to maintain this target range until labor market conditions have reached levels consistent with the committee's assessments of maximum employment, and inflation has risen to 2% and is on track to moderately exceed 2% for some time. I think that would say that they see, 3%, 4% over a couple quarters. They might have to take some action. In addition, the Federal Reserve will continue to increase its holdings of Treasury securities at least $80 billion per month and of agency mortgage-backed securities of at least $40 billion per month until substantial further progress has been made towards the committee's macro employment and price stability goals. So what does this mean? This means your mortgage rates are going to remain low for the most part, to make it a real simplistic attitude about this. And this means that you're looking at, they're going to keep buying Treasury bonds. And that means that interest rates should stay the same. They've been ticking up lately because people see interest as being a problem in the future, and long-term rates were starting to buck up a little bit. And by buck up, I mean they're not under 2% anymore. They're going up to 2.5% and maybe 3%. They're really not going up that much, but banks were preparing for this, and really investors that buy the loans from the banks were preparing for this. So I hope that makes sense. And so they're basically going to keep on trucking and keep on trucking. So, yes, thank you, Fran. Mash the like button if you like how fast I can read. I have a 4th grade reading education level. Actually, I don't. I have a 3rd grade education level. But this is so $80 billion per month they're going to be buying. because they just want the price stability goal. So they're going to keep everything the way it is because they like what's happening right now. These asset purchases help foster smooth market functioning and accommodative financial conditions, thereby supporting the flow of credit to households and businesses. So your prime rate should not tick up on your credit card if you're worried about that, according to what's going on right now. So how does this affect you? Before I finish at the end, because the end is really in assessing the appropriate stance of monetary policy, the committee will continue to monitor the implications of incoming information for the economic outlook. We're going to take a look at things, blah, 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 blah. They'll change their policy if risks emerge that could impede the attainment of the goals that they stated. The goals are keep shit the same, and expectations, blah, 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 signed by these people. So, oh shit. I just read the wrong press release. I think the new one's going to look just like it. Whoa, I just made a huge mistake. I just read the wrong press release. That is crazy. Nobody would have noticed that either if I didn't do that. Let's go find the one today because it's going to sound exactly the same. They did not raise interest rates, and I bet it's pretty much a carbon copy of that. So let me go look that up. All right, let's look this up. How did they not release that thing? It was released at 10. It was released at 11. Huh. Let me take a look at this. That is hilarious. Well, I don't even see it. I can't find the release yet because it's not on the Google. All right. So give me a like for reading the wrong statement right now. Go ahead. I'll take my beating. I got so excited I just Googled it. But I guarantee you it's the same exact thing. They're not raising interest rates and for the same exact reasons. So that's what you're going to see. And that's why the market's just shot up. So, questions? Anyone? I'll read. I swear. I promise I'll read the current one. But I'm telling you, it's gonna be the exact same thing. So, let's take a look here. I literally just watched somebody reading this online too, but it was the new one. So the Fed's statement and forecast are bullish for stocks. And that's State Street Global Advisors. They're suggesting they're keeping the interest rate near zero for a while. They're going to continue the asset purchases from that stand. It's exactly what they've been doing. They're continuing. So Dow pops more than 20 minutes after Fed decision. The S&P 500 traded flat. Yields on benchmark Treasury notes were little changed. So the mortgage market kind of priced all that in. So they're saying that they'll raise things within a half point if need be, and then if not, then they won't. So that's the great thing about doing this live is the hilariousness of that. So there we are, and Doge just took a hit. I don't know what happened there, but this is really more for your regular stock market. Bitcoin's still climbing. People might have taken money out of things like Doge in order to move them to things like regular stocks like the Dow or Tesla had a nice bump that went back down. So I think you're going to be seeing, we got slow mode on. Hello. And I think you're just going to be seeing a continuation of the same monetary policy. And right now, oh, look at Doge taking a little run here. And somebody just bought a large amount. That was a big buying spree right now of Dogecoin. So somebody had their price points back at just under 5.7, I think, or around it. All right, here we go. Morgan E. Will the crypto boom save us from a depression period that would have been as a result of government funding? You'll have to talk more about that. The government funding saved the depression era, I think, if we're being realistic. Okay, so the Fed chair is speaking right now. Let me see if I can't find the C-SPAN Fed chair. Here we go. Oh, no, that's the old one again. Here we go. I'm going to put him on right now and let him speak to you. I can do this because it's C-SPAN.
Control your lights, locks, and more with Cox Home Life.
Take some time
for substantial further progress to be achieved.
All right.
Our forward guidance for the federal funds rate, along with our balance sheet guidance, will ensure that the stance of monetary policy remains highly accommodative as the recovery progresses.
There you go.
Our guidance is outcome-based and ties the path of the federal funds rate and the balance sheet to progress toward reaching our employment and inflation goals. Overall, our interest rate and balance sheet tools are providing powerful support to the economy and will continue to do so. To conclude, we understand that our actions affect communities, families, and businesses across the country. Everything we do is in service to our public mission. We are committed to using our full range of tools to support the economy and to help assure that the recovery from this difficult period will be as robust as possible. Thank you. I look forward to your questions.
A Zoom meeting. Has anybody got their pants off in the Zoom meeting?
Howard from Reuters.
Hi, Howard.
Hi, Chair Powell, and thanks for that. So could you talk us through how
Hi, Howard.
the forecasts for 2021 map into the substantial further progress definition? 2.4% inflation. I understand that's considered transitory. That still seems like some progress there. 4.5% unemployment. Is it time to start talking about tapering yet?
Not yet. As you pointed out, we've said that we would continue asset purchases at this pace until we see substantial further progress. And that's actual progress, not forecast progress. And that's a difference from our past approach. And what we mean by that is pretty straightforward. It is we'll want to see that the labor markets have moved, labor market conditions have moved, have made substantial progress toward maximum employment, and inflation has made substantial progress toward the 2% goal. That's what we're going to want to see. Now, that obviously includes an element of judgment, and when we see, we'll be carefully looking ahead. We also understand that we will want to provide as much advance notice of any potential taper as possible. So when we see that we're on track, when we see actual data coming in that suggests that we're on track to perhaps achieve substantial further progress, then we'll say so. And we'll say so well in advance of any decision to actually taper.
If I could follow up on that, the shift in the dots, why wouldn't that suggest a weakening of the commitment here? An awful lot of people shifted into 2022, it seems.
I don't see that at all. We have a range of perspectives on the committee. I welcome that, and we debate things, we discuss things, and we always come together around a solution. But the strong bulk
I'm a bartender
of the
in a saloon in 1876.
is not showing a rate increase during this forecast period. And as data improve, as the outlook improves very significantly since the December meeting, you would expect forecasts to move up. It's probably not a surprise that some people would bring in their estimate of the appropriate time for liftoff. Nonetheless, the bulk of the committee, the largest part by far of the committee, doesn't show a rate increase during this period. And again, part of that is wanting to see actual data rather than just a forecast at this point. We do expect that we'll begin to make faster progress on both spending, labor markets and inflation as the year goes on because of the progress with the vaccines, because of the fiscal support that we're getting. We expect that to happen, but we'll have to see it first.
Great, thank you. Victoria.
What's up, Victoria?
Hi, Chair Powell. I wanted to ask about the supplementary leverage ratio. There's been a lot of talk about what you all are going to do this month, which I'm happy to hear an update if you have one. But just sort of more broadly, do you think long term that the leverage ratio poses problems for implementing monetary policy at a time when the reserve supply is going to remain large? And if so, do you think that changes to the leverage ratio, including the SLR, are the way to deal with that problem?
Victoria, we'll have something to announce on that in coming days, and I'm not going to expound upon your questions. Why don't you ask another question? If
Doge
like,
going up, by the way.
That one, I'm just going to say that we're something in coming days.
Sure. Okay. Well,
She's
then
like,
I'll
sure.
ask about unemployment.
Whatever.
There's
She's like,
the
whatever,
unemployment
dude.
rate is you all have projections for the U6 rate, but you've also been, really emphasizing the
It's hard
fact
to add
that
so many
that's not the only
items.
thing that you all are
I'll
looking
get
at. You're also
confused.
looking at labor force participation and things like that. So are you all looking at ways of maybe adding to how you're projecting the unemployment rate to the summary of economic projections?
Well, let me say, as we say in our statement on longer run goals and monetary policy strategy, we look to a range of indicators on labor market. We never only looked at the unemployment rate, which is the only indicator of
There we go.
labor market outcomes that's in the SEP.
I think that works.
We look at a very broad range. You hear us talk all
He
the
looks
time
suspicious
about
to me.
participation, about
Do you trust
employment
him?
to population, which is the combination of the two, about different measures of unemployment. So it's wages, it's the job flows, it's
Tesla keeps
all of
going
those
up.
things they go into an assessment disparities of various groups. All that goes into an assessment of maximum employment. The trying to incorporate all of that into the summary of economic projections would not be practical.
Don't forget to subscribe if you're not a
obviously, the thing that
subscriber.
we do include is just the unemployment rate, and that's
This
a
is
very
quality
insufficient
entertainment.
statistic. So it doesn't include a lot of other things that we
This
that
is
we do look
highbrow
at.
entertainment.
And,
so I expect.
I wouldn't want to say that
I
we're
expect
looking to
subscribers
include
from
the
this.
other dozen things that we look at. into the
AMC,
SEP,
dead even pretty much.
but
Didn't do anything.
from time to time, we do look at
AMC
at
and
adding different
GameStop aren't
things,
going to be
but,
affected by this, really.
I would
so.
just say the SEP is it's a summary. It's
This
one
is-
device.
What's
It's
up,
not
Detroit?
going to
Robert
include
Young?
all of the things that we look at. I think you know the things that we look at. We talk about them all the time. So we're not actually looking actively at significantly broadening those indicators in the SEP right now.
What's up, Robert Young?
Thank you. Chris Rugaber, Associated Press.
All right, Chris. It's your shot. Don't blow it, Chris. Don't blow it.
Chair Powell, I wanted to ask about
You're blowing it, Chris. You're blowing it.
forecast overall. You're forecasting a very low unemployment
You're fucking up,
rate
Chris.
this year and in 2023. You have inflation, or the Fed overall is in the SEP forecasting inflation at or above 2% by 2023. Yet no rate hike in any of this forecast horizon. So is this telling us that you see a higher inflation rate than what's projected, or do you not, as you've been talking about, is the unemployment rate insufficient?
You had
or
one job,
what is
Chris.
this
You
telling
fucked
us
it
about
up.
the Fed's reaction function?
You fucked it up,
That,
Chris.
It seems
Your kid's playing
meeting the
Fortnite.
Fed's
You
dual
just lost your
mandate by
video.
2023.
One
And
chance,
again, no
Chris.
rate hike expected.
Way to go, Chris Ruderberg.
So I guess the first thing to say is that the SEP
Poor Chris.
is not a committee forecast.
Feel bad for him.
It's not something we sit around and debate and discuss and approve and say
up, New
this
Jersey?
represents our
I'm from
you
New
know,
Jersey.
our reaction function as a committee. It's a compilation of
Jersey
projections
strong.
from different people, and
Wait
since
till
we
these
don't debate
11-inch
it or
pythons
discuss
wrap
it, it would
around
be
your
hard for me
neck.
to say why each participant did what they were going to do.
Thanks.
So
You talking about him or me?
all I would say about this is that we've laid out what I think is very clear guidance on
Jersey
liftoff.
City.
And it's
I'm from
really
South
three
Jersey.
things: labor market conditions that are consistent with our estimates of maximum employment. And as I mentioned, we consider a wide range of indicators in assessing labor market conditions, not just the unemployment rate. Inflation that has reached 2% and not just on a transitory basis.
I think he looks
And
better with the
inflation is
stash,
on track
personally.
to run moderately above
Like a
2%
John
for
Bolton
some time.
mustache.
The first two of those three are very much data-based. The third does have a little bit of an element of expectations in it. So we are very much determined to implement this guidance in a robust way. It is
Happy St. Patrick's
the
Day, by the
guidance
way.
that we chose carefully to implement our new framework. And to meet these standards, we'll need to see data,
Camden County,
as I
baby.
mentioned. So what does this SEP really say? It says that we're committed to our framework and to the guidance we've provided to implement that framework. We will wait until the requirements set forth in that guidance are clearly met before considering a change in our policy rate. And the last thing I'll say is this.
I use Binance.
The state of the
but
economy in 2 or 3 years
it's easier.
highly uncertain, and I wouldn't want to focus too much on the exact timing of a potential rate increase that far into the future. So that's how
What
I
do
would
they
think
charge you,
about
James?
the SEP.
All right. So I literally read the report from January
Thank
instead
you.
of today,
Call
so I
Karen.
apologize, but it was the same exact report. Nothing
Thank
has
you, Chairman
changed. They're
Powell.
still buying the same amount of bonds.
My question
Treasury,
is twofold.
and-
One,
oh, this guy,
how
he's got his act
high
together.
are you
comfortable letting inflation rise?
He
There is
works
some
hard on his beard.
ambiguity
He trims it,
in
keeps
your
it
new
short,
target, as
so
you
it stays
mentioned,
dark.
expectations driven. And do you think that ambiguity might cause markets to price in a lower tolerance for
See,
inflation
this actually fits him.
than the Fed
That
actually
must
has, thereby
actually.
causing
That looks like his
financial
mustache we're
conditions
using.
to tighten prematurely? Is that a concern? Thanks.
So we've said we'd like to see inflation run
Chairman.
moderately above 2% for some time. And we've resisted, basically, generally, the temptation to try to quantify that.
If you're just tuning in,
is
they haven't raised interest rates.
talking about
The,
inflation
the
is
market's
one thing.
kind of
Actually
tipped up
having
for it.
inflation run above 2%
Dogecoin had a
thing.
rise, and then it's
So
been some profit taking.
over the years, we've
they
talked
did
about
the exact
2%
same thing
inflation
as they
goal.
talked
We haven't
about
achieved it. So I would say we'd like to,
in January,
you know,
not raising
perform.
interest rates, still buying monetary
That's what
easing.
we'd really like to do. Is to
Same
get
old, same
inflation
old.
Moderately, and we
If
haven't done
interest
it yet.
goes,
You
if
know, when we're
inflation
actually
jumps above 2%
we
a
can do
lot,
that.
then they'll do something in the
um,
coming year.
Look, I would say this: the fundamental change in our framework is that we're not going to act
So
preemptively
that's good news
based
for the
on forecasts
regular
for the
markets.
most part. And
With
we're
the
going
crypto,
to wait to see
it's going to
actual
be
data. And
wait
I
and
think
see.
it will take people time
I think some people maybe
to
have pulled
adjust to
out
that
of some of their crypto to buy
and to
regular
adjust to
stock.
that
This
new
was a
practice.
surprise,
And the only
kind
way
of.
we can really build the credibility of that is
Bitcoin's
by doing
been
it.
heading up.
So
Bitcoin went
that's how
from
I would think
55,000
about
to over 57,000.
Thank you.
Right.
Matthew Bosler.
Hi, Chair Powell. This is Matthew Boser with Bloomberg News. So there's
Talk about
widespread
stashes.
presumption at
I don't
this
even
point
need to
that
add
the
one on
US
this guy.
will reach herd immunity sometime this year.
He just hit
And
puberty
all
like
along
last
you've
week,
said
and he's
that
trying to
the
grow this
path of the economy
mustache.
is going to be determined by the course of the virus.
Yes.
I'm curious, based on the projections that you released today that show unemployment
That is the
will
worst
still
mustache.
be above
Is it
estimates
just
of
me?
maximum employment through
Does
the
not
end
look
of
right on
next
him.
year and perhaps sometime
I'm
into
sure he's an excellent
2023.
reporter.
Do you think policymakers need to be doing more here to
He
sort
plays
of
a
align
Rhodes
the
keyboard.
herd immunity and full employment
My
timelines, if you will? Thank you.
Cherie Mo.
So on herd
Pretty as
immunity,
a
I'm really going to
summer
leave that
day.
question to the experts. We don't control that. We're not responsible for defining it.
I think Doge will follow
and,
Bitcoin. I think you're right. So
we'll
there's
leave that
Bitcoin.
whole
This is Bitcoin we're showing.
discussion to the experts. I mean, what we're focused on is
There's Doge. Dropping a little right now.
the part that we control, which is the support that we provide to the economy. And there we provided very clear guidance. And in the case of asset purchases, it's at their current level until we make substantial further progress. There is an element of judgment in that, and
Which we add to.
therefore we'll supply clear communication well in advance of actually tapering. And we just went through the criteria for raising interest rates. They're very specific, and we're very much committed to having them fulfilled robustly. I would agree with you that the path of the virus continues to be very important. We have these new strains which can be quite virulent, and we're not actually done yet. And we're clearly on a good path with cases coming down, as I mentioned. But we're not done, and I'd hate to see us take our eye off the
That
ball
guy was on
before we
before. He did
actually
look like a
finish
lunch
the
lady.
job.
Yes. Sorry to the lunch ladies out there.
So that's how I would look at that.
If I could just briefly follow up, how do you see sort of the disconnect in terms of an economy that is
We gotta see
expected
this
to be
guy.
widely reopened this
Hello.
year, but full
Wow.
employment taking longer to achieve? Is it the case that factors related to the
Somewhere
virus
there's
will
a woman
still
that
be
wants to
with
sleep
us,
with him.
over the coming years?
Somewhere.
Is that how to interpret the forecast?
I feel bad, but that must.
I think there's some of that. Sure, there'll be some of that. There'll still be some social distancing. People may be, for example, going into spaces that involve close contact with others. Some people will do that right away. Others will hold back, and so I think there'll be some of that. In addition, though,
I think
remember
sideways,
there
I think
are
you're
10
right.
million people in the range of 10 million people who need to get back to work, and it's going to take some time for that to happen. It can happen maybe more quickly than it has in the past because it involves the reopening of a sector of the economy as opposed to stimulating aggregate demand and waiting
Just
for
open
that
my
to
gym
produce
again.
job
That's all I'm asking.
demand for workers. This could be a different sort of a process, and it could be quicker. We don't know that. But it's just a lot
Is
of
he from
people
Hoboken, really?
who need to get back
What,
to
the-
work, and
the,
it's
uh,
not going to happen overnight. It would
the
be
reporter
it's
or
going to take some
Jerome
time.
Powell?
No matter how well the economy performs,
Him and Frank Sinatra?
unemployment will take quite a time to go down, and so will participation. So that's all I can say. I think the faster the better.
that doesn't
We'd
sound
love to
right,
see
that
it come
$70
sooner rather
gas
than
fee
later.
for
We'd
the
welcome
$100.
nothing more than that. But realistically, given the
the
numbers,
chat.
it's going to take some time.
Thank you. Steve Leisman.
Mr. Chairman, thank you. I wonder if you could, kind of a three-parter here, but all related. Would you comment on the current level of the 10-year yield and some other long rates out there, whether or not you think they would have a negative effect on the economy? And if not, is there a level that would give you concern? And finally, the third part, other central bankers have expressed concern about what's happened to yields in their countries, and even some taken action, but not you. Could you give us your general idea or orientation towards the idea of coming into the market and affecting a particular tenor?
This guy
of the
looks a
bond
lot
market?
more professional
Do you
than the
like
other
that idea?
people.
Do you not like
The
it?
other
Is it at the
people are
top of your
sitting in like
toolbox,
their
or is
mom's
it
basement.
something that you think is at the bottom of the toolbox?
Sure. So we monitor a broad range of financial conditions, and we're always attentive to market developments, of course. We're still a long way from
Don't
our
forget to
goals,
subscribe.
and it's
This is
important
quality
that financial
highbrow
conditions
entertainment.
do remain accommodative to support the achievement of those goals. And
There's
if
an
you look
alien
at
behind 'em, so
various
we know it's a
indexes of
conspiracy.
financial conditions, what you'll see is that they generally do show
It's a fact
financial
now.
conditions overall to be highly accommodative, and that is appropriate. So that's how we look at it. I would add, as I've said, I would be concerned by disorderly conditions in markets or by a persistent tightening of financial conditions
changed
that
this-
threaten the
this
achievement of our
broadcast.
goals. We think the stance of monetary policy remains appropriate. Our guidance on the federal funds rate and on asset purchases is providing
This
strong support for the
broadcast is-
economy.
I have to put my little
And
thing
we're
in here
committed
for
to maintaining that patiently accommodative stance until the job is well and truly done.
Could you give us an idea of how you sort of feel about that tool of being able to come into a particular part of the market and either doing an operation twist or something like that? Is that something you feel to be the top of your toolbox, or something that you don't really prefer?
You know, the tools we have are the tools we have. What I'm telling you is that the stance of monetary policy we have today, we believe is appropriate. We think that our asset purchases in their current form, which is to say, you know, across the curve, 80 billion in treasuries, 40 billion in mortgage-backed securities on net. We think that that's the right place for our asset purchases. Now we can
Thank you
we
for
can
the
change
likes.
them,
I
of course,
appreciate those. That was
in
thank
a
you.
number
Very
of
nice.
different
We've
dimensions.
got a highlight
Should we deem that that's appropriate?
ratio.
But for now, we think that our policy stance on that is appropriate.
Is it appropriate? Yes.
Thank you. Rachel Siegel.
Don't fuck it up, Rachel.
Hi, Chair Powell. Thanks very much for taking my
Like Chris did.
question. You've spoken about the pandemic's disproportionate toll on Black Americans,
I like
Hispanic
earrings.
Americans, Asian Americans, and other groups in the labor market. And I'm curious if you can speak to specific indicators that the Fed will be using to measure job gains for groups that have persistently higher rates of unemployment compared
Let's
to
go
white
with mustache.
Americans. And
Suits her.
relatedly, since you've described vaccines
St.
as
Patrick's
key to
Day.
economic
Speaking
recovery,
of that, I gotta go to
is
St.
the
Patrick's
Fed
Day soon.
concerned about lower vaccination rates in communities of color, and what barriers do you think exist there? Thanks very much.
So which measures? So we do monitor and communicate very regularly about different labor market disparities in the labor market, let's say. So the African American unemployment rate is substantially elevated, and so is the Hispanic unemployment rate. So we look at those and we see those as, you know, it's slack in the labor market. It's sad to see because those disparities had really come down to record lows since we started keeping the data that way. As recently as a year ago, February of last year, we had those disparities quite low. What happens in a downturn, though, is they move up at twice the speed of white unemployment. So we monitor those things.
He just
Our
burped.
tools, of course, affect
wasn't me, that was
unemployment
him.
generally, but we're going to look at those
I think Jerome Powell
as
just
a form of
farted.
slack in the labor market and hope that
Or he had to
you
eat
know, that
lunch.
there's progress there. And this particular downturn, of course, was just a direct hit on a part of the economy that employs many minorities and lower paid workers. The public-facing workers in the service industries, in many cases,
Type
don't
in-
have a lot of financial assets. They're not tremendously
Oh,
well
not yet.
paid. They might have other jobs and things
shoot.
like that. So
Okay.
this was a direct hit on that part of the economy, and it's the slowest part of the economy to recover. So, we'd like to see those people continue to get supported.
Type in stonks.
As we.
I'm gonna
as
give
the
$10 to
broader
somebody
economy
before I leave.
recovers, which
I
is
gotta
very
go do
much
St.
doing now.
Patrick's Day stuff.
In terms
Type
of
in
disparate
stonks.
levels of
You hear me?
vaccination, that's those
Give
are
away
facts,
$10.
unfortunate facts. They're really not something we
$10.
have within our policy.
$10. Type in stonks if
toolkit
you're listening.
to address, but it is true though that the data we have suggests that there are significant disparities between different ethnic groups, and
nobody's listening.
but that's
There
not
you
for
go.
us.
Thank you.
That's for
There
fiscal
we go.
authorities and the government more generally
right.
to work on.
We're gonna have to leave Jerome. You'll have to watch him on yourself. But I'm gonna give away $10
Thank you,
before I get out of here.
Jameis Mialik.
I think I've got a date with the wife for some St. Patrick's Day beer, green
If
beer,
you could talk a little bit
mid-afternoon
about
before the kid gets home from
how
school.
you see
Meatball,
the fiscal
more money.
policy support that has come down the line
Eduardo
affecting the economy's
Hernandez.
potential in the longer term, just in the sense that you've talked a lot about the potential for labor market scarring and how that might weigh on our sort of future prospects. And I wonder whether you
That
see
guy with the
that
mustache
sort of
has
working
no
in
chance with
reverse.
this
If
one.
we pull people back into the labor market more quickly, does that improve our chances?
So I do think that fiscal policy
Stonks.
overall will have
STONKS.
really helped us to avoid
Robert Young.
much of the
You can do
scarring
it.
that we were very, very concerned
Third
about. at
time's
the
the
beginning.
charm.
And I think that's just the size and the speed with which Congress has delivered, with the CARES Act and since then
Stonks.
has
Robert Young.
is going to wind up
With an N.
very much accelerating the return to full employment. It's going to make a huge difference
That's
in
not my
people's
New
lives,
Jersey
and it
accent
has
coming
already.
through.
As I mentioned in my opening remarks, the recovery has been faster than we expected. Part of that just is
Stonks.
very hard to predict, given we've never seen an event like this. But part
You
of it
can do
is
it.
just the strength of the fiscal response.
You can do it.
Which I think will look good over the years. Longer term,
Come on.
to
There you
really
go. Okay.
the first part of
There
it
we go.
is about avoiding scarring, and I think we've not avoided all of the scarring, but we've probably avoided the worst
Okay.
cases there. And I hope we keep at it, and we will keep at it with our
Where'd the
policies,
dog go?
of course, to do whatever we can to make sure that continues. Longer term, though, what it takes to drive productive
there.
capacity per capita or per hour worked to raise living standards over time is investment in people's skills and aptitudes.
He's got some
investment
sunglasses
in
on.
plant and equipment, investment in software.
St.
It
Patrick's
takes
Day.
a
All
lot
right,
of
I'm gonna pick the winner.
to
Sorry,
support a
Jerome.
more productive economy
There
and
we
raise living
go.
standards.
Let's
And
go
that's-
ahead
that hasn't been
and
the principal focus
roll
with these measures.
Sleepy
Our
Random
measures,
wins
certainly,
again.
and we don't
Sleepy
have those
Random.
tools,
You know
but
my email
what
address,
Congress has
right?
been doing has mainly been replacing lost income and beginning to, support people as the economy.
Dave at
returns to normal. But
bluehairdayplan.com.
There should be a focus on
Email
a
me.
longer-term focus. I think
Remind
would be
me.
healthy
'Cause that's how I go through my little thing
on-
about
on
who
the
to pay.
investment front.
Sometimes it reminds me.
Thank you, James Politi.
All right, James. I'm going to take him off of there, and I want to thank everybody for coming on this live stream short notice, and I just wanted to get the Fed announcement. Interest rates are unchanged. I actually read the statement from January, but it didn't matter because they did the same exact thing. Oh, the dog? You want to see the actual dog? Okay, let me get the actual dog over here. Yeah, hold on a second. Come here, Sharky. Oh, he's making... Come here. Oh, boy. There we go. There we go. This is Sharky. Say hi, Sharky. Say hi to the microphone. There you go. This is him. Right here. Say hello. Hello. Ooh, I have a subscribe thing over my face. That's interesting. Here he is, yes. Alrighty. Oh. Alright, so... I didn't realize I had the subscribe thing over my face this whole time. Does everybody see it like that? I guess that works out better in the long run. He's a star now. Yes, he is. All right, everybody. Thank you for coming by. Thanks for all the likes. We have lots of likes. Thank you so much, and I'll send that money out. I just wanted to make sure you guys knew about the interest rates and what it was doing to stocks. The Dow included. Tesla still going up. So Doge, Bitcoin up and up and up and up, and Doge, a little spike, and then it kind of evened out. That's right, Doge mascot. He's a Boston Terrier. All right, everybody. I'll see you guys later. I might do another live stream tonight. Depends on what happens at St. Patrick's Day with the lady. All right. Goodbye.